Today we're going to talk about the power of eligible Canadian dividends in an investment portfolio. A corporation pays tax on its net income for tax purposes annually. These after-tax dollars, or retained earnings, may then, at the discretion of the board of directors, be paid as a dividend to the shareholders. There is no tax deduction to the corporation for paying out dividends. The shareholders who receive these dividends include them in their personal tax return like all other income, calculate their personal tax bill on those dividends, but receive a dividend tax credit, which roughly is equivalent to the taxes already paid by the corporation before the dividend is paid out. This dividend tax credit may well in fact offset 100% of the tax bill owing. The dividend tax credit is a fixed amount. What this means is the tax reduction you receive on this dividend tax credit is the same regardless of the taxable bracket that the investor is in. So this means that the highest tax bracket, you will in fact pay approximately 10 to 20%, depending on province of residence, than you would if you received the same amount in interest income. At the lower tax brackets, the dividend tax credit may well completely offset taxes otherwise payable. So these dividend tax credits are available to all Canadians regardless of what province they live in. But let's, as an example, look at British Columbia. You'll notice that there are multiple tax brackets, and at the lowest levels, eligible Canadian dividends actually have a negative tax rate. What this means is the dividend tax credits not only offset the tax otherwise payable on dividends earned at that level, but there is excess left over to offset taxes on other forms of income. Even at the highest marginal tax bracket, over $135,000, you will note that eligible dividends are almost 20% lower tax cost than other incomes such as interest. So one of the results of the dividend tax credit is that in each province, an investor can receive a certain amount of eligible Canadian dividends as their first form of income and pay zero income tax. This is because the dividend tax credit has completely offset the taxes otherwise payable. So how can NexGen help you create eligible Canadian dividends? Well, NexGen's patent-pending corporate class mutual fund structure is the only structure in the country that allows you to request and receive eligible Canadian dividends on any of our bond, balanced, or equity mutual funds. Our intention is to pay out a monthly pure flow of eligible Canadian dividends for the uses that you find most attractive as an after-tax result. In this case, you are allowed to maintain the risk tolerance of your comfort level and receive the taxable income that you prefer. I hope that helped, and there's more information on our website on this and many other topics.